Hello traders and good afternoon. So this is a trade review of the trades that I took on Thursday and on Friday. So I took the trades on Thursday. I took two trades, one trade, and then on Friday I took one trade. So this is for um 9th and 10th of April. Yes. So 2026. So let's get into it real quick. So you remember that on the previous one I told you that it's not a coincidence that this NDOG has held price and nobody has been able to close below this area. So that being said, no candle body had been able to close below 4704 on both a 4-hour and 1-hour chart. So that being said, I was quite sure that we were going to expand to the upside on Thursday. So the last videos that I dropped, I think, were on Wednesday or maybe on that Thursday. Yes, on Thursday. So this is a continuation of those videos. So to understand what I'm really talking about, you have to understand that. So when I came to the 4-hour chart on Thursday, we had this expansion to the upside that had formed this change in state of delivery. So this right here became a 4-hour change in state of delivery within a bullish market. So this one was a 4-hour change in state of delivery, and we'll reduce that so that our chart does not become cluttered. So as soon as I got that, let's put it at 10, then add a 4H CISD. Okay, so as soon as I got this, I went to the 1-hour chart. So uh, that was the 5 a.m. candle, which now takes us into the New York AM session at 9:30. So remember, I do not take trades before 9:30 open. So you can see that even on the 1-hour, I had gotten that change in state very early, but it was in the Asia session, so I did not take that trade then. Okay, so when I got this expansion at 6 a.m., this 6 a.m. candle, and then this is 7 a.m. candle. So what you can see between these two candles, between these three candles, the 5 a.m., 6 a.m., and 7 a.m., is that we have a fair value gap. And as I told you, I use fair value gaps, swing highs and swing lows as my key levels. So I drew that out, and let's delete this NOG for now so that we can have a clearer. So I had that fair value gap. This is a 1-hour FVG. So at 9:30 open, what I wanted to see before the 9:30 open or during the 9:30 open is price come to the downside, um, retest this area of imbalance, and then displace to the upside. So at 8:30 we got that. That is what we got at 8:30. I think it was at 8:30. Yes, you can see that this is 8:15 and 8:30. So that's when we got that retest to that area and then started displacing to the upside. So my change in state, my first 15-minute change in state of delivery was supposed to be here. But as I told you, most of the times we have another manipulation at 9:30, which usually comes back to the 9:30, 8:30 manipulation, because this is some form of manipulation when we run back to the imbalance. So I just have to wait for the 9:30 bell to do its thing. And then what we got at 9:30 instead was a change in state to the upside, which now confirmed that this whole retracement was over, and now we do not expect price to come back as low as this. So if I enter a trade, my stop loss will be right here. So after 9:30 did this to the upside and closed there, when we were retracing to the downside, that is when I started stacking my entries, my long positions with my stop loss to the 8:30 a.m. low. So assuming my first position was here and my stop loss right there, and my first target was around here 48.05. So we had this sell side right here. So you can see that was a very good 1.4 hour trade. And remember, this is not the stop loss that I will be using to run the trade. As we go higher, I will adjust that stop loss and trail it to the upside. So let's see what happened next. We retraced even lower, and when price came to this level here, I added another position here. So assuming that I had two positions, I had that one, the original one there. Then I also added another position with the same stop loss right here, around here. So because this was my invalidation, as soon as I noticed we were not closing below this, I added a position when that candle closed, which was there, and my same stop loss, and then the targets were the same. So you can see that this one gives me a better risk to reward, which was a 2.31 2.3 trade. That is only first take profit. I wanted it to expand to the upside, which clearly we did not, but for the sake of this trade, let's use the 4807 target. So I have a 2.3 position, R position, and I have a 1.4 R position. So that in totals give me a very good position that I was able to hold to the upside. So bring this back to this side. So yeah, that is how I traded on Thursday, and I noticed that price was having a hard time closing above this area. Okay, and as usual, you know that I close my trades immediately at 12 if I notice that we are not going to be taking any partials, or we have not taken out any take profits. For example, my first partial was supposed to be here. So as soon as I noticed we were starting to get some weeks and then come back, week off, come back, I closed that trade at exactly 12, because if we have not swept this liquidity before 12, I expect price probably to reverse. So that is what I did. And those who are in my Telegram channel can attest to that. I closed all my trades at around 47.90 92. Yes, around 92. So it was this week right here, 47.93. And you might think that is not a good trade, but let's see how many pips I got from that trade. So for the first entry, which was 47.62, which I remember, I took them off at, yes, it was around there, because I've told you I took those trades as price was tracing to the downside, which I expected to reach here. Then I closed it at 47.92, so that is 47 around 93 92, so that was around 300 pips. For the lower position, the lower long position, I took it at around here, 47 something, closed it at the same level, that was 380 pips. So I got a very good profits from that trade, and that is how that was the logic behind taking that trade. So yes, this will be a quick one. So should we look at DXY? Should we look at DXY? Yes, maybe we should. DXY was in line with whatever I was looking for on that day, because I think on the previous day we left that we had swept this buy side and now we were displacing to the downside. So if you look at this price point here, let's look at it from the 4-hour chart. So from the 4-hour chart, my main goal was to see a 1-hour change in state of delivery, which had been delivered very clearly. Yes, exactly. So you can see that this was the last up close candle on a 1-hour chart. So this being my last up close candle on a 1-hour chart, what I used was this, and then this becomes a 1-hour change in state of delivery, because you can see that we have displaced and closed below this. So you can see that this is institutional sponsorship. This is one of the signs of institutional sponsorship. Sponsorship. So it's a displacement candle that has formed a displacement to the downside. So when I saw that, and on the other, so this is the 7 a.m. candle. When I go back to gold, just a minute. When I go back to gold, and so that is the gold futures. I'm starting to use the futures for my analysis, so you'll see more of that very soon, but that is not the thing we are here to do today. So this is the 6 a.m. candle and the 7 a.m. candle. So you can see that on gold, this is the one that formed that upside displacement that left that fair value gap, and then on DXY you can see that we had the opposite happen. We had that displacement to the downside, which means that now I am confident that gold will displace to the upside as DXY displaces to the downside as it targets this sell side liquidity, which it has left open. And I will address this in maybe tomorrow's trade what weekly outlook. I will address this because we still have a lot of sell side, so I expect it to drop a lot and then go to the upside, which was actually my analysis on Friday. So that being said, let's go on into Friday. Okay, so on Friday, now I have to go back to the what to the daily chart, because as I've said, this is a continuation of the videos that I dropped on Thursday. That's the afternoon. So if you haven't watched that, it will be very easy to understand what I'm talking about in this video if you watched that one. So let's do this from the daily, I think. So I noticed that Thursday had been an inside day just within this range, but we had swept this uh, previous day low and went back to the upside, as well as respecting this end dog. So you have to keep this end dog in mind whenever we are doing that analysis. So that had been respected, the new day opening gap between Tuesday and Wednesday, which I addressed very much on Thursday's video. So you have to watch that. So on Thursday, I noticed that we had swept that liquidity and respected this end dog. We had swept the previous day low and respected this new day opening up. So when I noticed that, I was quite sure that on Friday we were going to get a displacement to the upside, if it was not for, uh, even if it would not have been a very substantial long position. I wanted to target at least 300 pips. It would have been easy to get that, which it was. So let's go down to the 4-hour chart and see the levels that I used to take that trade. Okay. So the timing on this day was the one that brought me a lot of issues. So you can see that between this candle, this, okay, just a minute. This is the candle that gave us a 4-hour change in state of delivery. Okay. So you remember this from that previous trade that I have just shown you, because this is the this is what we have here, a change in state, 4-hour change in state of delivery. So you have to train yourself to see these things in real time. Okay. Um, you have to train your eyes to see these things in real time. Otherwise, all of this becomes useless information if you can only see it in hindsight. Okay. So this is a 4-hour change in state of delivery to the upside, followed by a fair value gap, a 4-hour fair value gap. So of course, that is a very important level that needs to be retested before price goes to the upside. All right. So that is what we have. We have that 4-hour fair value gap, which I will mark in gray, in a very light gray, so that doesn't come too heavy on the eye. So we have that 4-hour fair value gap right there. And then now I can go down to the lower time frames to see how price reacts to that. So you can see for the first time on Thursday so this is actually Friday's Asian session. We tried to dip into that, but we did not get a good reaction. Had a change in state, but it did not hold. Came again, swept this. This now is a sweep of Asian lows right here at 4 a.m. At 4 a.m. we swept that Asian low, went back to the upside and formed a 1-hour change in state of delivery, a very good 1-hour change in state of delivery. Okay. And then at 6 a.m. what we did is we retested that, respected. Now this becomes an order block. So we are now respecting 50% of this, and we do not want to see any bodies closing below that. So we can actually mark that. And so this is the order block, body to body. So we want to see price respect 50% of this order block if it's going to hold price to the upside. Okay. So we want to see price respecting this. So I usually mark all 50% as 0.5. So we want to see price respecting this to the upside if we want to target longs, and that is what we got at 6 a.m. But as you know, I'm very skeptical about trading between 6 a.m. and between 6 a.m. to 9:30, because a lot of manipulation happens then. So I tend to miss a lot of good setups because of that. And this was an example of that, because I ended up entering very late in this trade, and that's okay. You won't always have the best setups, and you might always miss some good setups. Okay. So on the 15-minute, you can see that price is also respecting the 0.5 level that we have just marked. So let's see how I trade. I actually took two trades on this day, one buy and one sell. Okay. So I noticed that At 6 we started getting that displacement to the upside, displacement. Remember, now I'm only waiting for 9:30 to open so that I can take my position. So this was the 9:30 open candle, which now I wanted to frame my setup with. So this is what I wanted to use as my continuation order block for the displacement to the upside and at least target 48.02. Okay, so as soon as we got this displacement to the downside, I waited for this change in state to the upside, and that is when I started taking my trades. I took this trade, I think, on a 5-minute chart. So I will go to the 5-minute chart and I will show you how I took that trade. Where's the 30? It was around here. Where's that candle? Where's that candle? Um, did I take it on a 3-minute? I don't think so. Because I think I took that trade. Yeah, I took it on a 3-minute. Okay. Yes. I took that trade on a 3-minute. Oh, yeah. Yes. So the longs I took them on a 3-minute candle, and this was my reasoning. You can see this series of last down close candle. So this is what I wanted to use as my series. Okay. So as soon as I got a close above this series of last down close candle, I was sure that price. What? I haven't even taken any sugar foods. What's happening? So this was a change in state to the upside, a 3-minute change in state. So I used this to take my trade and place my stop loss just below this here. Okay, if I would have gotten this is my invalidation because this is the series, this is the last up close candle. So if I would have gotten a close below this, I would have known that the setup was invalid. So this was how the setup looked like. I entered immediately, took a very aggressive entry, placed my stop loss just there. Then remember, I'm targeting 48.02 where we had those highs, these highs. You can see these relative equal highs. That was my first target, and I was willing to close all of them right there. So that is a 1.5 R trade. It should be a 1.5. Let's see. 48.02 is good. Yeah, right there. So that is a 1.5 R trade, which is what I wanted to get out of this trade. But instead, what we got was, okay, my bad. So instead of that, what we got was this slight movement to the upside. This was a very good displacement of around 150 pips, 140 pips. So, and then we started getting a displacement to the downside, which I noticed on the 1-minute chart, but I ignored. So I will not show you that. But as soon as price started displacing to the downside like this, I got stopped out on the first trade of the day. And that was just because I was afraid of taking the trade earlier because of the 6 a.m. candle. I do not like trading the 6 a.m. candle. It has done me wrong very many times, so I learned to stay away from it. But this was one of those days when the 6 a.m. candle give you one of the best setups. Okay, so I got stopped out on that trade, and that was my first loss of the day. So as I was doing that analysis, I had noticed that we had this. That is why in the group I mentioned that I did not share this setup actually because it was a very high risk setup. So if you have been with me long enough, what is this? This becomes trendline liquidity. Okay, all of this. So remember, this was not printed. So all of this becomes trendline liquidity. Okay, so now I'm trying to explain how I ended up taking shorts on this uh, on gold without looking without without it seeming like I was gambling, because I was not, and this was a very informed decision. So as I was taking this long position, I actually did not risk a lot, and I was quite certain that after we sweep 4800, I was sure that after sweeping these relative equal highs, we were going to come back for this trend and liquidity. So this was a setup that I had in the back of my mind, and I was willing to take it after we had done a sweep of 4800. So when I was stopped out, I immediately went and looked at I immediately went and looked at the 1 hour chart. And so whenever you're stopped out, you either end the day or you go to a higher time frame and look at what you might have missed. So when I went to the higher time frame, this is what I noticed. I noticed that we had this 1 hour inverted fair value gap, because this to the upside, this is to the downside. So that becomes a 1 hour inverted fair value gap. And I usually have a template for that marked in faint yellow. So this is cream, I don't know. So you can see that price has been respecting that inverted fair value gap for a very long time from Thursday. You can see we wicked into that, displaced to the downside, and then we keep on wicking inside it and coming back. And for this wick right here, the 10 a.m. candle, which was the one I was in the trade, I noticed that closure. And if you know price action, this is a very clean reversal candle. If you see a price wicking to the upside, leaving a small body in the inside, wicking and just retesting some important levels and coming back, you should expect a reversal to the downside. So this is an order block, a 1 hour order block. We have retested the order block. We have closed below the 50% of the inverted fair value gap. Additionally, we have closed inside the range of those candles. Okay. So when I noticed that, I went to the 15 minute. Actually, I think I took this. Did I take it on the 15 minute or on the 5 minute? Let me see my history. Because I think I took it on a 5 minute. Oh, oof. I took this trade around here, because remember I've been stopped out. I closed the trade manually. The other one I closed it manually because I told you my invalidation was as closing below this, because now that becomes a bearish change in state of delivery. So as soon as I saw that, as this candle was forming, is when I took the short positions and placed my stop loss just above 47.96. But that is just to have a stop loss. But my main invalidation was here at 47.90. And if you look at the fast paced video that I have posted on my Telegram, you will notice I took this trade live. I was recording it, so it is a recorded video, and you will notice that I said that if price closes above 47.90 on a 5 minute chart, then the whole setup is invalidated. So as price was doing all this shenanigans of retracing higher, I added a few positions right here, and placed my stop loss. So let's use this to see how that looks like. So I entered at around 47.77. My stop loss right there, but my invalidation is here. So a stop loss is just to protect you in case we have a spike, but you need to have an invalidation. So my invalidation was 47.90. So what am I targeting? I'm targeting the sell side liquidity and the trendline sell side liquidity in form of trendline liquidity. And then on a 1 hour chart, I had very nice target, which I will just show you right now. At 47.40, you'll notice that we had these equal bodies right here. So if you transform this into a line chart, you will notice that we have very good sell side liquidity right there at 47.40. So I'll go back to the bodies, use so on the 15 minute or on the 5 minute, that is where my target was 47.40. Where is it? um it's right there, and you see that we have some sort of inverted fair value gap. So that was a very good target, the inverted fair value gap. So 47.40, that was my target, which we actually hit full take profit on it, you can see. So that was a 1.9 hour trade, and that was my last trade of the day, even though I did not hold it to that level. And you might ask why, and some of you might already know the answer. I did not hold that trade because remember I said that, as usual, if I see a quick displacement to the upside and then price start retracing during the lunch session, I usually close that trade immediately when the 12 a.m. candle opens. So that is exactly what I did. I closed that trade around 47.55. So I was able to come out with how many pips? Let's see. And I had adjusted my stop to here when we got that close to the downside, 47.40. All of this, all of these are in the fast paced video that I have posted on my Telegram, so you can check it out, which does not have an audio. It's just me recording on the chart, annotating on the chart what I want to see and how I am adding positions. So soon as we got this close below this retracement, I adjusted my stop loss and I even added a position right there. So I closed this trade at 47.55, which was when the lunch session opened. So those that was another 150 pips. I was able to make back what I had lost in the previous trade. So that was 210 pips. So that is around 210 pips. On Thursday, I made 300 pips. Plus that is 510 pips. And then I had lost around, let's see, how many are these? I had lost what? I had lost around 200 pips. So between those 2 days, Thursday and Friday, I was able to come out with 300 pips positive, which is good feedback from the strategy that I'm using right now. So gold has been really good this week, and that is how I traded it. So for the trades I took on Monday, Tuesday, and Wednesday, Monday and Wednesday, the video is on YouTube. And then now this specific one is for the trades that I took specifically on Thursday and Friday. So this last one, so that was my last trade, which actually ended up hitting full take profit if I had held through this New York lunch session. But as I have said, we do not have perfect days every day of the week. Okay, so the point is just to trade as perfect as you can and execute your edge as perfect as you can. So over here it was it supporting what I wanted to see? Yes. I'll not go over DXY for this trade, just to keep the video short. So you can see that on the 1 hour we had that displacement to the upside, which meant that I was expecting price to drop to the downside to 47.40 on gold. So yeah, you already know how I correlate gold with DXY. So basically that's it. Thank you for tuning in. See you on the next one, which will probably be a weekly outlook. I don't know if I'll do it live on TikTok or here on YouTube. So I'll make a decision and inform you through my channel. Thank you for tuning in. Stay blessed.